A Connecticut man has been warning the public, get your money out of U.S. banks immediately. A historic financial reset in 2023 could cause a run on the banks unlike anything in our nation's history, he says. His warning has already reached 8.4 million Americans and 30 TV networks. And yet, few people realize this could actually happen on U.S. soil, or what a sizable impact it could have on your wealth, especially if you have large amounts of cash in the bank right now. Normally, I might ignore all this, but it turns out he's a Wall Street legend whose work predicted the COVID crash, the 2022 crash, and the 20 best stocks of 2022, and more. Today, he's urging you to move your money into a new vehicle 50 years in the making. He's even posting a free recommendation, which you can access at reset2023.com. His work pointed to a 10,090% gain back in 2020, so don't miss this. A new vehicle outside the banking system could massively boost your wealth. You can get the details today at reset2023.com. Again, that's reset2023.com. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on Stansberry Research, getting you in the mood for the holiday spirit with Mark Yaxley today, Managing Director over at Strategic Wealth Preservation. They are a bullion provider and a storage facility based in the Cayman Islands. He joins us today from the vault. What a treat. Mark, always good to see you. Welcome back to the show.
Always a pleasure, Daniela. Welcome back inside the vault.
Yes, I am super excited for this episode. But before I say or give away any more of what we're going to do today for the folks at home, you know it's tradition, and I have to ask you, how much gold is right behind you today? I love it.
Well, based on the recent increase in the price of gold, which a lot of gold investors are pretty, excited about, I'd say there's well over $200 million worth of gold on the shelf behind me.
So you could do some pretty serious damage with that.
You could do some good holiday shopping with this, definitely, yeah.
Yeah, well, give that note to my hubby, Mark. Okay, I'm excited for today because if you love precious metals investing, or maybe you're new to it, maybe you're intermediate, or maybe you're advanced, this is a great episode because we're going to be covering all those bases. Mark is going to be giving us a walkthrough of, what we need in our portfolios today. But first, before we go there, just want to get your thoughts, Mark, on everything happening right now on the economic landscape, especially in regards to gold price. Do you like the price action you're seeing?
Well, we love the price action we're seeing from an investor standpoint. We also believe in precious metals. We invest in them personally. And so it's nice to see this, because when it was trending down towards $16.25 an ounce, a lot of people were starting to check out of precious metals. We had some long-standing clients that, especially on silver, that kind of gave up and unfortunately sold off at those lower prices. So this has really been encouraging, and this goes back to stuff we've talked about before. You watch the US dollar. Every morning I wake up, I look at the Dixie. I'm looking at to see what the US dollar is doing, because it's starting to weaken now. It's starting to return to that median value. It's still got some ways to go, and that's really positive for gold. So I think this is going to continue. The fundamentals are really, really strong for gold ownership. And then you have what's going on with the crypto market right now, and that's starting to lend itself to some more influx of investment into our space.
And I want to ask you about that. I mean, I know you've been very vocal on Twitter about this FTX shakeup, what's happening on the crypto space. I'm curious to get your thoughts if clients are calling in, maybe re-looking at precious metals. Maybe they had taken some of that money, moved it into crypto. Are you seeing any funds flowing back to precious metals yet, or is it too early?
I mean, it's happening, and as we speak, we have had clients contacting us and kind of asking us what our opinion is. And obviously, I've gone out and said, look, if you had invested in this kind of physical asset that is hard money in a physical storage facility, we're not talking about digital gold or paper gold. This stuff doesn't go away. It doesn't just disappear. It doesn't vanish. It doesn't go missing in the same way that, unfortunately, some of the investors at FTX are now experiencing. And I'm not trashing crypto, because that I've always said you should have some crypto, and it's really unfortunate that people have lost money. But there's a lesson to be learned from this situation. I think having hard assets is part of that lesson, definitely.
And it's a hard lesson for many, Mark. I just want to get back to another point you made about how people, panic, they sell. Talk to me a little bit about the psychology, because you've been at this for a long time. Of, do you notice that people just like to buy high? Is that it?
It's funny. I was at the LBMA conference recently, and one of the panelists made a remark that really stuck to me, and there's a lot of truth. And he said, in the Eastern market, so in China and in India, they're really price sensitive. They're really good at buying on the dips. They really look for that soft price, and then they really load up for whether it be for for jewelry season or whether it be as an investment. In the West, with North American investors in particular, they tend to buy as the price is rising, and they tend to sell as the price is falling, which basic logic would tell you is completely backwards. So we do see that happen. Like I said, people were starting to give up on silver at about $17, $18 an ounce. I don't necessarily blame them. If you've been holding silver a long time, that's pretty disappointing news. But again, that was really the opportunity to be buying, to be increasing the number of ounces that you own at a lower cost average point. And then now you're benefiting. Only a few weeks later, you've already made $4 or $5 profit. So that's fantastic for those who did take advantage.
Right. Really interesting thoughts. And just before we dive in here, if you could talk to us a little bit about what you're seeing on the premium side. I know last episode we spoke a lot about how premiums are through the roof, especially on silver products. Is demand as robust today, and what can you tell us about premiums?
Daniela, I am shocked. In preparation for the interview, honestly, I was checking out the wholesale premiums because I knew this question might come up. Silver Eagles wholesale right now are at about a 60% premium, 61, 62.
60?
Yeah, 60. And so if you're a retail investor, by the time you get to buy your Silver Eagles, you're paying almost 70% premium on these Silver Eagle coins right here. And I have one on the table because I do want to reinforce that point at some point in this conversation today, how kind of ridiculous that is. But to answer your question, it reflects the true demand for the U.S. Mint's product. I mean, these premiums are higher today than they were during COVID when the U.S. Mint wasn't able to produce products. I mean, it's incredible. I've never seen it in 16 years. It's really incredible, actually.
Okay, and maybe, I don't know if this is an impossible question to answer, but what's behind that appetite, right? What's behind that appetite? Because you're saying we didn't even see this one when they weren't minting during the pandemic. I know there's a lot of uncertainty, but do you have any insights behind what's behind that demand, and why isn't it creeping out in the price yet?
Well, it has started creeping out in the price. The price hasn't leapt at the same level that the premiums are at right now, but we have seen
Fair.
We've seen some pretty dramatic price increases in silver, 50-cent days, 50-cent movements on the upside. It's a result of a lot of things. It is a result, obviously, people have those concerns about inflation. They have concerns about their portfolios, the equity markets. I mean, it's still really shaky out there, but then always go back to that US dollar. As US dollar softens, it costs you more US dollars to buy an ounce of silver, to buy an ounce of gold. So it's a negative correlation. It's really, really simple. If you wake up in the morning and the US dollar is down, gold and silver are going to be up. That's a big, big part of it. But it has, those premiums, I can't explain it. Danielle, I can't explain it. Honestly, I don't know why anyone would pay that much money for a silver.
Okay, so and that's why this segment's so important, because when we were discussing what we could, bring you to the folks, we both decided it will be interesting for you to walk us through, okay, if you're a beginner, if you're an intermediate, or if you're an advanced buyer of precious metals, what your stack should be looking at, what you should be thinking about, especially given these high premiums, right? Because a lot of folks are buying, they don't even get how premiums work, how spreads work, it's all overwhelming. So that's why I thought this is so important, if you could walk us through things we should be thinking about. So do we want to start with beginners here?
Sure. And you'll notice right away, first thing you'll notice about the table in front of me is there's a lot of bars on the table. There's not a lot of coins here, and there's a reason for that. So this all goes back to what I call the 3 golden rules. And I'm going to just go over those really quickly because everything else I'm going to say ties into that. Rule number 1, gold tends to have a lower premium than silver, right? So your premium per ounce is, in percentage terms, almost always going to be lower for gold than silver. Rule number 2, bars have a lower premium per ounce than coins. And that's why there's a lot of bars on the table. So we'll circle back to that in a second. Rule number 3, the bigger you go, the less premium you pay per ounce. So that being said, if you're a beginner, let's say you've got, your first purchase, you've got $5,000, $10,000 that you decided you want to dip your toe into the precious metals market, you want to start building your portfolio. It's a great starting point. You don't have to go all in on day one, okay? Don't go all in on day one. But the first thing I'd like people to realize is like you can save yourself some premium by looking, and I know it's hard to see, but I'll put that a little bit closer for you guys. 1 ounce gold bars are a really, really good buy for beginners. They carry a lower premium than 1 ounce coins, and they still are manufactured by premier refineries. This one's a Royal Canadian Mint bar. This one is an Argor Heraeus bar. There's a few options out there. The thing is, when you're spending $5,000 or $10,000 on an investment, instead of splitting it up between gold and silver, you're going to try to want to like maybe focus that first purchase on just one metal, so you get a little bit of a volume discount, or you can get the largest bar possible with the money that you have. So if you can stretch your investment a little bit more and go to like a 5 ounce bar or a 10 ounce gold bar, you're going to save a few more dollars on your premium. It means more gold in your portfolio in the long term. So for beginners, that's the takeaway. Focus on one metal and try to buy as much of that metal as you can.
I'm taking notes here, even though I've been at this for a long time. I'm still taking notes. Okay.
So if you're an intermediate buyer, and this isn't necessarily about money, this could be just about how long you've been doing it. I can use price points, but that doesn't mean that you haven't been buying metal for a long time. Some people have been buying metal a long time and making smaller purchases. But these are just general guidelines. Once you get into that point where you're buying like $25,000 up to, let's say, $50,000, you definitely want to start diversifying. So if you focused, for example, on gold on your first purchase and you bought as much gold as you could as like a cornerstone of your portfolio, then you want to start diversifying into other metals, because each metal reacts differently to the market conditions. We've seen silver rally lately, outperforming gold in the last couple of weeks. So you're getting that upside that silver has in a good market. But again, something to keep in mind is the larger the format of silver that you can buy versus buying 100 of these 1 ounce silver eagles at 60% premiums, go get yourself 100 ounce bars, 1,000 ounce bars. It's about a $20,000 piece of silver today. And you're going to drive your premium way down, like really significant. We're talking like maybe by 50%, from 60% over spot to like 10% over spot or 15% over spot in a market like this. So a lot of savings to be had. So the message there is diversify, but try to keep your premiums down for intermediate buyers.
Wait, so I have a question for you. Um, do you get counter questions to your point that, well, it's harder to store the bigger bars, it's heavier, it's cumbersome, so then am I forced to be in a facility, and how expensive is it? I know you provide storage opportunities, but is it something that people can afford? Or I know it's a relative word, but how expensive does it get, or pricey?
I mean, people are not forced to ever hire private storage. FedEx will deliver, and we do deliver these 1,000 ounce bars to people's homes in the US and in Canada. The FedEx drivers hate it. They hate it. I mean, it's a 70-pound brick. Like it's
probably right up there after dogs on the porch.
Yeah, exactly. Yeah, exactly. If you have a dog on the porch and he's dropping off this, then you've ruined his day. It's awful. But point is, you can take delivery at home. You need to know what you're getting into. This thing, I can't tell exactly how large it appears to the audience, but it is big, and it is heavy, and it takes up room, and it's valuable. If you have more than like one or two of these in your house, you're taking risk of physical theft, other things. Maybe you want to consider storage in a secure storage facility. That comes with a cost. For silver, it's about 1% of the value per year. So it's not huge, but that includes everything: your insurance, your statements, your audits, all those things. Gold is less. It's about 0.75%, even down to 0.5%, if you want to look into that option.
Thank you for that. So now moving on to the seasoned investor. And what do you do when you're comfortable? You're like, I got enough gold, silver.
Yeah. So seasoned investors, I mean, you're talking people that have anywhere from 100,000 to several $1,000,000 worth of precious metals in their portfolio. They are generally very premium sensitive, because every percentage point that they're saving equates to a few $1,000s, even tens of thousands of dollars on a transaction. So they're typically looking at nothing smaller than 100 ounce silver bars. A lot of them buy 1,000-ounce silver bars to drive their premium down. So lessons learned there. Again, larger bars, lower premiums. Kilo gold bars, super popular. This is probably the best selling product that we have for larger investors. The premium on one of these today is like 2.5% over spot, maybe 2% if you're buying in volume. So that's, you're coming way, way down from the extremes that we were talking about earlier with smaller silver products. And the other takeaway, and you know, I love throwing this in there, is platinum, palladium, diversify. Like those investors that already have several $100,000 worth of gold and silver, they're going to throw in a few ounces of platinum and palladium. You know, and again, these metals, they have different market, you know, performances and attributes than their cousins, gold and silver, do. So that's a way to round out the portfolio. Now, I wanted to circle back to these silver eagles. Closing thought. One thing that we see with people that have a lot of gold and silver, and I get it's kind of weird because it seems like counterintuitive. It's like they've mastered the art of investing in metal. They've been doing it forever, and they're like, Mark, should I have a box of silver coins at home just in case something you know goes terribly wrong and I need money to like you know the milk and the bread. And I'm, you know me, I'm not an advocate of fear mongering or anything like that, but the question comes up, so I'm like, you know what? Okay, if you want one box, we'll sell you the box, whatever. But don't go and buy silver eagles. You know, the spread on these things, forget the premium. The spread on these things, if you were to buy it today and sell it tomorrow, you've lost like $7. That's crazy. But if you went out and bought a silver round right now, you know, you bought it today and sold it tomorrow, you might lose like $3. So the point being, first of all, don't buy it today and sell it tomorrow. Point number one. But point number two is don't just run out because it's produced by the US Mint and think it's the best thing on the market. There are alternatives that look exactly the same. They have the same amount of silver, and you're going to save yourself some money. So just keep that in mind.
Like the maple. You love the maple. Is that the alternative?
I do love my maples, Daniela, but even the maples are creeping up right now. The market's in such a state that these private refineries are actually starting to be really attractive again. That's not always the case, but right now they are an attractive buy. Yeah.
Okay, I had another question for you. I told you I was taking notes here. When you're saying that, so the premiums are lower on gold compared to silver, why is it important to diversify with that silver component then? Why would you want to add in some silver?
So silver's performance, I mean, it does tend to track gold in the general trend line. When you look at a chart of gold and silver, generally the trends do follow each other. What you'll notice about silver is it's much, much more volatile than gold. So in a bad market, like when, you know, gold was trending down to 1625, silver really was dropping off, you know, significantly. But the opposite side of that argument is in a good market where the metals are trending up, like right now, what we've experienced the last couple of trading sessions, is silver really is popping to the upside. So they always say gold is the cornerstone of your precious metals portfolio. Silver is the trade. That's like you're betting. It's a risk. You're like, I'm going to put 10 or 20% in silver and hope that for whatever reason the market pops, and then you should be selling when that happens. Don't hold it forever.
And I think it's interesting, your platinum palladium, you really only mentioned that for the advanced buyer. That's when you'd be bringing it in?
I mean, look, we're kind of generalizing today, and it's impossible to kind of give specific advice for
of course
every individual situation. But I would say the earlier you can work in some platinum and palladium in your portfolio, you're better off. You don't have to be wealthy to do that. Platinum, you know, is trading at less than $1,000 an ounce right now. Very affordable. Palladium is a little bit more expensive, and the premium on those products is pretty high. They have pretty wide spreads on them, so it's something you want to consider.
This was a question that came up a lot when I told the folks you were coming on, and it's regarding the death of Queen Elizabeth and how many people wanted to get those last coins in circulation. Is there logic to that? Could those go up more in value? What are you seeing on that, and any thoughts?
Yeah, we actually called the Royal Mint in England. We were curious to know what they thought about it, so we called them. And they said that they've basically sold out of every coin that carries the Queen's effigy. And they said they are now positioning these coins, or these coins have repositioned themselves in the market as collectibles. So we're not in the collectible space, we're not so much in that space, but it sounds like, as per the Royal Mint, who produces most of those products, that the Queen, it's the last time we're going to see her face on a coin. She will be replaced by King Charles in spring of 2023, I think, are the first releases coming out. So if you do happen to have some coins with the Queen on them, you'll probably want to hang on to those and see. You might get a few extra dollars down the road. Yeah.
I also had a question regarding the Fed. Do you notice that investors, and I get the logic, but they tend to wait to pull the trigger on a precious metals buy after the Fed meeting, because they're just waiting to see where it's going to go? And I get the logic, but just curious to get your insights.
Yes, we always see an influx of orders immediately after the Fed meeting. The comments lately, they've been consistent. They're raising rates. I don't think that's surprising. But yes, you kind of see a quiet day prior to the Fed announcement, and then within like the first 3 to 6 hours, you'll see a stack of orders come in. So yeah, that's human psychology. People always want to know what's coming next, what the prediction is going to be. They try to guess what the price is going to do. So yes, to answer your question, we do see that.
And look, I started by saying we're getting ready for the holiday season. We're really kicking it off here. Do you see more, are people buying for the holidays? Do people buy precious metals for their loved ones more so around this time of year?
I think they do. I've told you this before. I'm not ashamed to say it. I bought my wife several Christmases, like a kilo gold coin. Kilo silver coin. Jeez.
Right, that's for her, right? It's for her.
That's for her. No, totally. Well, maybe a little bit for me, but I do. I have gifted silver and gold for Christmas, for weddings. I think it's a great thing. I think other people do it, definitely. There's a lot of nice coins. If you're not ordering bullion for your loved ones, you can go out and buy some collectibles from the Royal Canadian Mint, the U.S. Mint. They have some really nice stuff and nice packaging, and all that. Definitely.
Wow. I appreciate your insights. Before I let you go, you mentioned you were at the London Bullion Market Association meeting in Lisbon, which is a great meeting. And as we're wrapping the year, I guess just final thoughts for investors, anything you want to share that's notable about the precious metals market that we should be paying attention to?
Yeah, so to sum it up, if there was two takeaways. One key takeaway, probably the largest theme from the LBMA, it was really, really in your face, I would say, and not in a negative way, was this whole ESG governance, environmentally responsible push by the LBMA. Most of that pertains to the mines, especially mines that are operating in second and third world countries where regulations are not as stringent, controls are not necessarily in place, and they're concerned about that because that ties into gold's reputation as a product and so on and so forth. So there's a big push in that area. The other thing I noticed, which is actually an indicator of where the market is, where the gold market is right now, is a lot of money is being invested in storage facilities. So there's a very large new storage facility going to be opening in Singapore. We've actually broken ground on a new building here in Cayman, as you know. There's other facilities being built in Nevada in the United States. I'm telling you, like 5 or 6 new facilities are being built right now. And what that tells you is there's so much demand over the last 2 to 3 years. People need places to keep their metal. And the business owners, the people that these entrepreneurs and these capitalists are taking advantage of that and investing money in these physical buildings to keep all that gold and silver. So really interesting takeaway. That kind of stuff is not happening in a bad market.
And I'm still thinking about that 60% premium you told me. That's insane. But Mark, this is such a special treat. I know it's a lot to prepare everything inside the vault, and I appreciate you taking the time to walk us through that. That's awesome. And happy holidays.
You too, Danielle. It's always a pleasure. It's always a pleasure to connect with you, and wish all the best to your viewers during the holiday season.
A lot of fun. Thank you, Mark Yaxley over at Strategic Wealth Preservation, and thank you all for watching. We'll have much more coming your way, so be sure to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com to stay on top of all these incredible interviews behind the scenes here inside the vault. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.